high on the index coming through. Well, the primary markets are hot and buzzing as well. It's not just secondary market action. So let's focus on a new issuance. I'm talking about INOX India's 1459 crore IPO, which is open for subscription. The issue is entirely an offer for sale. And I have the pleasure of welcoming Siddharth Jain, promoter and non-executive director of the company, in our studios to talk about this offering. Siddharth, great to have you with us here.
Thank you.
Thank you for coming in. I just want to, we'll get into what the business, etc. is about, but INOX is a name which investors in the secondary market are pretty familiar with. But this INOX is different from some of the other, companies like, there's Gujarat Fluorochemical, INOX, that part as well. Just tell us about the group itself, the structure.
Sure. Our group, we have 3 companies in our group.
Yeah.
It's called INOX Air Products. It's India's largest industrial gases company. We're a private company. It's a 50-50 joint venture with Air Products of the US and ourselves. The second company is PVR INOX, which most of you and your viewers will be aware of. And the third company is INOX CVA, which is what we are doing an IPO for right now.
So no relation with the other.
It's family, but no, there's no cross-holding or any ownership.
Tell us about the company itself now.
Sure. Yes. So this company was started 30 years ago by my father, and it basically specializes in customized cryogenic equipment, and we've been manufacturing this now for 30 years. And our end applications are the clean energy space.
When you say cryogenic, what do you mean?
Yes, a good question. Cryogenics is any fluid below minus 100 degrees centigrade. So from minus 100 to minus 270 degrees centigrade, if you want to store, transport, distribute that fluid, you have to store it in cryogenic containers. I think the easiest way to understand that is if you go to a hospital and you see outside there's this white big medical oxygen tank, that tank actually has liquid oxygen inside it, which is at minus 183 degrees centigrade. But outside it's like plus 30, right? And you don't see that. That's because of the technology of the tank that keeps cold things cold inside. Okay, and that's what we do. That's what we specialize in.
Which is the big industries that you?
So we have 3 divisions. The first one is that of industrial gases. The second is LNG, and the third is cryoscientific. I'll just quickly go through them. Industrial gases as things like oxygen, nitrogen, argon in liquid form. And then we also have hydrogen, which is the new age, it's the final frontier for clean energy, as everyone's been speaking about. So liquid hydrogen is at minus 260 degrees centigrade. And we make, really critical equipment to store, transport, and distribute the same. So going forward, we recently supplied the world's largest liquid hydrogen plant being set up in South Korea. So the main baseload storage tanks for the same have been made by an Indian company and supplied to South Korea. Oh, wow. It's not a well-known fact, and which is one of the reasons of going public is so that we spread the message far and wide that these are the capabilities that exist in our country.
Siddharth, we want to talk more about the business, but before that, just some minor details. What is the promoter holding currently in the company?
It's about 99.3%.
Okay, and why did you decide not to do a fresh issue of shares?
So we actually are debt-free. We are cash positive. We're about 220 crores of cash on our balance sheet. Okay. And the main aim of going public is to gain visibility for a company. So we are, we're a dominant player in India, but our market share globally is a very low single-digit percentage.
So you want to gain market share globally as
exactly,
well? And promoter holding post the issue will be how much?
75%.
75%.
That's right. 75.
So it'll come down from 99 to 75%.
Yes.
Pretty interesting business, Siddharth. But I wanted to ask you about pricing of this IPO.
Sure.
Last couple of years, the promoter entity, they have bought at 30 and 100 rupees. What's changed so drastically that in 2 years from then, you are coming out with this sort of an IPO price? That must be something that changed.
Pricing is decided by the bankers based on, our past performance and projections for the future. And if you see our growth over the past 2 years, we've grown at approximately 27% CAGR. In fact, for the first half of this year, we've done about 580 crores in top line, about 145 crores in EBITDA, and about 103 crores in PAT. So on an annualized basis, that's the way the bankers kind of come up with the valuation.
Well, that's pretty good, right? You're growing at 25, 30% or 40%, but the IPO price is at nearly around 5.5, 6 times to what y'all are taking it. But I take your point on board. You believe the fundamentals have changed, and that's why, in fact, bankers are justifying this price. Got it.
Right.
You told us there are 3 verticals, industrial, LNG, and cryo scientific, I think so.
Yes.
Your order book is around 1,050 crores.
Yeah.
Break it up for us, segment-wise.
So about half of that is in industrial gases, 25% is in LNG, and 22% is in cryoscientific. And just to take you on LNG, LNG is liquefied natural gas. Now India has 6 import terminals of LNG. And globally, it is the near-term transition fuel from, diesel and LPG. People are converting to LNG, which is the lowest CO2 emitting fossil fuel. So the adoption of this globally has already happened at a pretty rapid pace, but it is currently a supply constrained market. So there's not enough LNG molecules available. As and when more molecules are available, we will see a much larger build out of the infrastructure.
Sorry, what do you mean, LNG molecules?
LNG is manufactured, it has to be liquefied. Correct. Wherever natural gas is available, some of the biggest countries are like Qatar, Algeria, yes, Australia, the US. India doesn't have any LNG manufacturing capability. We import LNG. But once it is imported, it is, other than pipeline, it is distributed in small-scale LNG in cryogenic tanks.
Right.
And then it goes to end industrial customers and is regasified there.
You said your order book is 1,050 crores.
Yeah.
So just tell us about the order cycle. When you get an order, I mean, typically, what is the size of order? How long from when you get the order to execution?
Anywhere from 4 months to a year. So half our book are standard tanks, half our book is non-standard tanks, which is solutions that we provide.
Okay.
So, for example, a hospital would be a standard tank. But if you go to an industrial customer with an LNG infrastructure who requires LNG, that would be a solution. Recently, the government of India announced 1,000 LNG fueling stations along the Golden Quadrilateral, so that diesel in heavy-duty trucks is replaced with LNG as a fuel in the heavy-duty trucks, and this has already been commercialized. I think 30 out of the 1,000 fuel stations are under commissioning right now, and your large OEMs like Tata and Eicher and the others, they have already launched commercial models of LNG fuel trucks, which emit lesser CO2 and in fact are cheaper as well.
So, you started by saying that you're looking for more export visibility.
Yes.
What is the opportunity in the export market? Which are the geographies you're looking to penetrate?
Sure.
And in terms of numbers as well, what do you think the growth could be?
Sure. So I'll give an example of our cryoscientific division, which I haven't spoken about. One of our oldest partners in cryoscientific has been ISRO. So the launch pad in Sriharikota that has been built, our company played a major role in building out the entire cryogenic systems for the launch pad in the early 2000s. And apart from that, we've delivered a host of other equipment to ISRO. Now, there are other global scientific projects. And, in Europe, there's a project called ITER. ITER is the world's first nuclear fusion project where 7 countries, including India, have come together. I think it's a $20 billion project. And we are supplying extremely critical liquid helium pipelines for the core of the nuclear fusion reactor.
You've already bagged that project.
We have, and we've executed it as well already.
What is the quantum?
That was, I think our overall was just south of $100 million. Okay. But this has happened over the past 5 years.
In the next 5 years, what's the visibility like?
So the purpose is that since we have done that, not many people know about it. Now, if you were a public listed company, more and more people would know about this. So like the ITER project, there are other projects in the world like FAIR in Germany, the CERN project in Switzerland, and others in America and other. Once we have this visibility, it makes it easier to explain to the rest of the world that we have this technology or this company who designs in India, engineers in India, fabricates here, and for the world. So our entire story is to explain to people, the quality of the products being made in India and being exported all over the world.
Okay, all right. So it's going to be a win for you all because you all are taking some money off the table. Win for the company, you believe, because they'll get more visibility. Now the shareholders will want to understand whether it's a win for them. That we'll know in the times to come. Quickly, before we let you go, two-part question. One is, I think you're operating at around 70% capacity utilization levels. So at optimum levels, what can you do? 1,500 crores of revenue, 14 to 1,500 crores, point number one. And point number two, your margins have been in the vicinity of mid-20s. At current reckoning, is that the number we should be working with going ahead as well?
So we currently have 3 operating facilities, as you rightly said, operating at 70%. We have just invested capital. In the first half of FY24, we've put in 80 crores to start our 4th manufacturing facility. We always invest ahead of demand.
Yes.
So we are predicting demand to come.
Okay.
And what we do is set up these large sheds or manufacturing shops where, you can keep making equipment. So it's a bit of a misnomer to talk about capacity. It's not like an automotive line where you keep churning. These are engineered products.
Yeah, let's make it simple then, Siddharth. What is the peak revenue potential you can do? 80 crores is what you put in. There'll be an asset turn on that as well?
In the past, we've done an asset turn of 4 on a gross block.
So 320 crores?
Yeah, well, there's no dearth of capital. We can keep investing based on the demand. If the demand doubles, we can put in a lot more capital. It takes us 6 to 9 months to set up additional capacity.
Okay.
Coming to the margins, our margins have been relatively healthy between in the early 20s for the past many number of years, and we certainly hope to continue that, if not improve it.
Okay. Well, interesting company and a new kind of, I don't think we have any listed peers for you. So great to speak with you, Siddharth. All the best for the IPO. You said you're listing so that you get more visibility, but along with the visibility, you'll also get the quarterly earnings monkey on your back. So
with great power comes great responsibility.
We're used to that.
So I think we'll speak with you again soon. Thanks very much.
Thank you. Thank you for having me.
All right, that's INOX India with the sort of IPO as it opens. It's open for subscription.